Good morning, everybody. It's Wednesday, May 21st. Welcome to another episode of Market Outsiders. We have officially made it halfway through the week. Congratulations. You're on the downslope towards the weekend. Thanks for starting your Wednesday with us. I'm joined today
Namaan,
by,
I don't think Wednesday morning counts. I gotta be honest.
Mm, look, it
That's a
counts for me. I got to do whatever I got to do, right? To trick my brain
That's
into
like
thinking we're on the downslope.
it's like saying the first day that you're
I got to feel I got to
34
feel
and a
the
half
momentum,
is, I don't know. Okay, whatever you need to do.
I
Get
got to feel
something
the momentum.
stronger in
Hey,
your
it's
coffee.
like
That's all I'm gonna say.
it's a It's a sunny day today. We've had a heat dome over Austin, so it's been like in the 90s and the 100s with like 85% humidity. And so that heat
I don't
dome
even
is
know what a
finally
heat
broken.
dome is. I feel
Honestly,
like
I
you
don't
live in
know
a heat
either.
dome.
I think we need to bring like a scientist or a meteorologist on the podcast to explain it to us, because I feel like this is a regular part of my life that I don't understand.
I feel like it's where you live. Like I don't.
Yeah.
That's what I'm saying.
Well, I've lived
Like,
I've lived here for
isn't it
like
the
almost a
ozone layer?
decade
Isn't
now.
that what a heat zone is? Like I don't know.
I,
It feels.
I think it's like it's a pocket that's probably like the size of like Texas, like of hot air. It's a pocket of hot air that like comes and like sits over the state, and for some reason, like it just sits. It doesn't move. It doesn't like cycle. It's like a blanket. And so, and then for whatever reason, it's here for days and it takes some miracle to be broken. And then, it's still hot, but at least you can breathe outside.
So you're saying there's a lot of hot air in Austin. Let's not have any hot air on the pod this morning, right?
Yeah, there's a lot of hot air in Austin. I think that's why there was news yesterday that people are leaving here and going back to the coasts. So, um, but anyways, we should get to the markets. We should get
Let's
to
do
the
it.
economy. You want to kick us off today?
Yeah, sure. Yesterday was Home Depot day. Like I think today's Target day. And so
Mm.
for me, I'm going to cover the Target news today. You want to preview what you're going to cover? I wonder if it's the same thing or something different.
I wanted to talk about Capital One and Discover.
Awesome. Okay. So we can't promise that we're going to do two, but it sounds like we're going to do two today. And so I'll kick off. I'll kick off with Target. In fact, I have more than one headline that I think would be kind of interesting to share today because I think that uh, what is happening at Target is very indicative of how if you only read a headline, you might get a very different view on what's happening in the market overall. So let me start with the first one. This one is, I think, kind of, closer to what I think makes sense, but it wasn't the first headline that I read. So this one is a Quartz headline. Target just sent up a giant red flag about the US consumer.
Pun intended, huh?
And and so yeah, exactly. What other color could the flag have been? Like I even wore my Target red today, since I didn't wear
Hmm.
my Home Depot orange yesterday. I don't have prison scrubs, unfortunately, so I didn't have anything to wear yesterday. But today I've got plenty of red. Right, so 30% stock plunge. I mean, that was part of the huge news yesterday was that Target was expected to maintain. It was expected to revise future forecasts, but not to miss targets and earnings in the first quarter. And some of this is, by the way, I think a little bit more dramatic than it saying collapsing store traffic is not what I read into the numbers. And margin pressure, I'll point to the same thing. So there hasn't been any margin pressure yet for Target. The tariffs on things that they sold in the first quarter were the same as they were in the fourth quarter of last year and in the quarters prior to that. So there is future margin pressure that they're concerned about. But this a lot of this headline is kind of like, okay, we're mixing timelines, we're mixing part of the story. We've got to tear that apart. But I think that this is kind of a key takeaway that I would take from news from Target today without knowing anything further and without digging into a much deeper level, right? Affluent shoppers are rattled and recession fears are rising. Here's the problem. Yesterday, we just talked about Home Depot and affluent shoppers are not rattled. That's exactly what the Home Depot earnings said. And they beat estimates. They didn't beat estimates, but they still were really strong on performance. And they have an expectation that they are not going to have to raise prices significantly due to tariffs. and that US consumers are not dropping off. So this is interesting to me because either they have totally different customers, which I don't believe, or something that Target's doing is really different than something that Home Depot is doing. And to me, that's what I would point to. So the news is going to tell you that it's macroeconomic because it seems to make sense to people. It's easier to digest. I don't think that's what the earnings are saying. So they're trying to extrapolate a couple of things, right? Mortgage applications are down, Walmart's reporting grocery gains, and now Target grows a growing list of beloved brands, waving a red flag that a recession may be coming. Look, 1 month out of their first quarter had to do with tariffs. Before that, it was like employment is at all-time highs. We have no concerns about recessions. So to me, this is just playing into headlines that are not materializing. But I do think that this question is important to dive into. Are income US consumers pulling back? Naman, you want to talk a little bit about a couple of those other pieces of data and whether you read the same thing in the tea leaves here that they're reading? And then I want to talk a little bit more about Target.
Well, Jenny Ray, my first question would just be how do you define high income? And how does Target define high income? Because, look, when I think of Target, I don't necessarily think of a brand for the affluent, right? Like my family shops at Target. We love Target, but that doesn't necessarily mean that like we're an affluent household. Like that's not how I would define like affluent. So I'd be interested to think about, okay, how do they define high income? It is true that kind of the top 50, excuse me, the top 10% of income earning households in America drive 50% of spending. And so if they define high income as the top 10% of income earning households, okay, this is not a great sign because that cohort drives half of consumer spending in the US, and consumer spending makes up 70% of GDP. So it's not a stretch to say that the top 10% of income earning households are is the cohort that powers the US through a recession and to the other side because they contribute an outsized portion to GDP because they keep consuming. And so could this be a sign that high income US consumers are cracking? I mean, it could be, but when I look at this contextually, it's not what I see. Because when I look at the earnings reports of the actual luxury brands, that's not what I'm hearing. When I look at the earnings reports of other retailers, that's not what I'm seeing and what I'm hearing. And so I agree with you that I think this is more of a Target specific issue. I know that there's been some pushback, and I'm not well versed in this, but I think there's been some pushback to Target's DEI policies, and there's like a boycott that's happening right now. That could be a part of the explanation. I also think that in some ways Target is stuck in the middle, right? Like when you think of like I want a deal on groceries, you think of Walmart or you think of your local grocery store. When you think of I need something, I need like home goods, you might think of other retailers. And to me at least, I feel like Target's brand is kind of stuck in the middle. It's like I don't really think of Target for groceries. I also don't really think of Target for like getting stuff for my house. So like what do I think about going to Target for? Honestly, I don't. Like this is a question I got to ask my wife because she goes to Target and there are certain things she prefers to get at Target, but like when I think of the brand proposition of Target, I'm like I don't know what I go there for. And this like might be a more existential question for Target to answer, and I might not be their core consumer. But it's just look like what is our unique value proposition in the market? Like we haven't positioned ourselves as like the budget brand, like that's Walmart's lane. We or the budget place to go. We haven't positioned ourselves as the most premium place to go either. So like we're kind of stuck in the middle. We kind of offer a lot of things. Like why do people come to us? And that clarity, right, that lack of clarity might be something that's coming back to hurt them when, in a more economic uncertain environment, people just tend towards kind of like they tend towards going to brands that offer the clearest value proposition, and that might be something that Target needs to work on.
Well, a lot of what they were saying, and this I think would be a concern, like you said, for the business model in general, is that the things that people are pulling back on are candles. And
It's
I was
it's
like,
what
is
we would
it
call discretionary spending in the economic.
yeah, exactly, which is fine, but that's not enough to hang a business model on. And so, these are a couple of the deeper numbers, right? Comparable sales fell 3.8%. That is a concern. But again, if you don't see it across every store in the sector, then you can't say that the US consumer is pulling back. You can just say they're pulling back from Target for some reason. And then right, in-store traffic down 5.7%, offset by a 4.7% rise in digital sales. Potentially margin pressure is coming from there. Potentially
Hmm.
not. Does Target want more digital sales or more in-store traffic? They have to sometimes make a decision about what they offer. Walmart's made a decision about the fact that they want more digital sales and they were outperforming on some of their e-commerce
One of
business.
the things that Walmart has done, right, is they've gone to a membership model. Like they've copied Amazon Prime and Costco. As far as I know, Target hasn't done that.
They
And
don't
so
have that insulated, kind of like, yeah, Prime revenue or the Costco revenue that basically is all of Costco's profit. So they're not
yeah, when
able to be insulated from that. And yeah,
exactly. And
Walmart's doing that exactly.
when you're having to build out a digital infrastructure, when you're having to like figure out shipping, when you're having to figure out customs duties, yeah, your margins are going to be compressed if your like shift of sales is moving from like an established retail channel to a more nascent digital channel.
Yeah. Exactly, right? But then again, right? They have a Kate Spade collaboration. Kate Spade is definitely not considered to be a low-end brand. Right? 36% surge in same-day delivery. Like I'm not sure if they're offering what all of their consumers are looking for at the level that they're looking for it. And I know, like we already talked about the fact that the day that I became a Walmart customer was the day that I bought Walmart stock. And when I go to same day delivery for grocery, or when I go to same day delivery for product, when I have it shipped to my house, when I actually use multi-channel inside Walmart, I do pickup at the store. I rarely walk into the store, but I do pickup at the store. I do delivery from the store, and I do shipping from Walmart because I'll take the basket however it comes. I think Target's missing out on a lot of basket opportunities by not serving customers where they are. So I never thought actually until you said it, Naman, about the fact that Target is a flag on the specific issues around the membership income. That should be a top thing of mind. I
Yeah.
literally until you said that had never thought of that. That's a great suggestion. But I just wanted to put out one more thing, and then I'll move over to your ideas because we're almost at market open and we haven't talked about the credit cards. But right, my bright red macro American signal. Like I think this is reading too much into what's happening at Target. I think our job first is to ask what's happening at Target, and then the second thing is the same thing happening somewhere else. And I think everybody is saying we expect to see recession signs. Look at what's happening at Target, but the recession signs I do not think are the primary thing that are coming out here. I just would encourage everyone who's listening to be very cautious when you're looking at the data at drawing what you think the narrative should be, because the best advisors are the ones who advise through a storm based on what is true. You got, like, if this is true, you have to tell Target you have really hard times coming, and this is a sign of a recession that's looming, and you have to prepare for that. But if it's not, you can't prepare for a macroeconomic recession. You have to fix your operational issues. And you can't advise them based on what other people are saying about their business. You have to help them fix the fundamentals no matter what. So I think it's really important not to waver from that kind of true north view when you're looking at these kinds of businesses.
And from an operator's perspective, right? Like, so, one of the first questions we ask ourselves when we're underperforming in a certain category is this us or is this the market? And I think it's really easy to blame the market when
Everyone on our team
oftentimes
wants to blame the
everyone on our
market.
team wants to blame the market, right?
Sometimes I want to
And
blame the market too,
100%. And
Naman.
sometimes it is the market, but what I found often is it's not the market, it's us. And like that's the first question that we ask ourselves, when we're not hitting certain benchmarks in certain areas of our business. And I think that's a hard question that Target needs to ask itself as well. And it might be signaling publicly to investors it's the market, but I hope internally the management team recognizes this probably has more to do with us than it has to do with the market.
Look, I didn't share my second view here, but there was another headline that was like, tariffs, right? Walmart Target misses earnings based on tariff fears. And I was like, what in the world are you talking about? Like it had nothing to do with future expectations. They missed earnings in Q1. And so it was just a complete conflation of the two issues at hand. But what that article did go into was talking about the DEI boycott. I think it has been material. And then also it talked about the fact that they've fired some senior officials and set up a chief acceleration group, which is basically thinking about their operational enterprise to be more nimble. I think what they felt in Q1 is that they weren't ready to respond to a lot of the changes, like the boycott, like the tariffs, with a role like enterprise-wide rollout. And Target is a large organization, but they felt like they needed to move faster on that. So I do think that those are the right signals in this kind of market.
I think it's
But
also
it was a different story, right?
different
Same
story.
data, different story.
I think this is also just a lesson. Like, if you're in what I would call a cyclical business, right? If you cater to consumers' discretionary spending, then there better be a direct like tie to some kind of utility between like what you're offering and what the customer is gaining, or what they're afraid like, or there better be a direct tie between what they're buying from you, and like the utility that they're afraid to lose. So I'll say that in a clearer way, right? Like there has to be a reason for me not to stop spending with you if I have to decide to cut back, right? So either I have to enjoy what I get from you so much that I'm going to cut somewhere else, or I have to be afraid of losing what I get from you so much that I'll cut somewhere else. And I think Target hasn't done a good job of like maybe positioning themselves that way and some of their offerings that way inside of the mind of the consumer. It's discretionary, it's emotional spending, right? It's something that I do like when I'm feeling flush, but it's not
Namaan,
necessary.
I would be careful of calling it emotional spending.
Well, well,
Some of
well,
us
well,
feel that it is necessary spending to get
well,
our, Mr. Clean cleaning scrub pads within 2 hours at Target,
hey, well,
okay?
when you know what, when the rubber meets the road, right? If people are feeling squeezed, this is when you figure out like what people feel is a necessity and what they see as a luxury,
Yeah, that's true.
right? And so if you are going to be like like a more cyclical retailer, if you're going to offer products, if you're going to offer services that aren't necessarily, core to somebody's life, then the convenience factor or the quality factor has to be so high that they don't want to cut back on those things. And I think Target again is caught right in the middle. Like it's discretionary spending, but the utility that I would get from that isn't utility that I'm like, I feel so bad about giving up if I need to cut back. And so I think that's just a lesson for any kind of service provider or retailer that caters to that segment of the economy is like thinking about how to make um, you know, the products you sell, the services you sell a little bit stickier in a tougher economic environment. I know we're past market open, so I won't take a lot of time talking about what I wanted to talk about today because I really enjoyed the conversation on Target. I might save this for tomorrow, but I just wanted to flag for people because the news broke last year, but the transaction just closed this week that Capital One and Discover have now merged. And I think the reason that this matters is because this is the first chance that we've had in probably a generation to break up the Visa and MasterCard duopoly. And I think that this is good news for consumers and good news for merchants because Visa and MasterCard really own the rails in terms of like online transactions or credit card transactions that happen in the US. 70% of all transactions in the US happen, via credit card. And so I think what you're going to start to see happen here is Capital One's going to move its debit and credit cards to the Discover interchange away from Visa, away from MasterCard. And they're going to now be like the fourth biggest kind of interchange provider. And so, after Visa, MasterCard, and American Express. And so, this gives Discover a little bit more heft. It gives them a little bit more negotiating power, in terms of like the interchange rates that they charge merchants and retailers. I think this gives Visa, MasterCard, Amex a little bit more competition. I think that's good news for the consumer. It's good news for merchants that process credit card transactions. And so I think it's a little bit under the radar news because the news of the merger broke a year ago, but it just got approved. There's more I have to say about that, but I think the biggest piece of this merger is the fact that you've got this credit card interchange market that is 90% controlled by Visa and MasterCard. And now you've got like a beefier competitor coming in, hopefully to take some share away from this duopoly.
That's a good one. Yeah, I think so. I'll just conclude by saying here's the data that I would want. Maybe we can cover it in a future episode. I don't know how much share of credit card issuance Capital One currently has, but probably more importantly to merchants, I don't know how much spend they account for. And so like I think what I would want to know if I were a merchant, which I am in the wineries that we own, right? And we accept Discover simply because we're on a platform that accepts Discover. We use a Square platform inside our winery. I think that it would be important for me to know if I were thinking about switching it off or moving to a credit card provider that didn't have it or not offering it, or at least saying that I didn't offer it. Most credit card machines usually just do. Would be how many out of every customer that comes in my store, how many of them are going to try to use a card that they can't use? Because the last thing that I want as a retailer is for somebody not to be able to pay me for something. I don't want anybody to walk away not being able to pay me. And so, the Capital One kind of share of wallet, right? Their tagline is actually what's in your wallet. So the
Hmm.
share of wallet around that, I think would be really, really important.
I, I think that's actually one of the strategic impetuses behind making the transaction. So, when I think of Discover, like, what I think of is that they usually cater to a lower income consumer. I think, which is why at a lot of retailers, Discover wasn't accepted because why I don't need to pay, right, to like
I
to
want
capture
Amex,
that
but I don't
that segment.
necessarily need you,
Exactly,
right?
right, depending on which business you're in. And so if Capital One is going to move its cards, right, Capital One's a more affluent customer base. If they're going to move their cards to the Discover network, I think that actually makes it more imperative that every retailer accept Discover. And so, like, to me, right, I think the entire impetus behind the merger and behind the transaction was to not just to be in the banking business, not just to be in the card business, but to actually be in the interchange business and be vertically integrated. Is that I can issue my own cards now on my own network instead of issuing my cards and having to partner with Visa and MasterCard. So
So
I
I
think,
would I would be interested in knowing the second thing because I know a lot about the payments industry because of the work that I did in it
yeah,
for a while. The second thing that I'd be interested in is whether or not Capital One has or has aspirations to own a private label card line because you can use private label on Discover Rails if that is potentially an option. So you don't have to only use Discover, you don't only have to use credit. You could issue, right? You could issue any kind of a gift card or
yep. Hmm.
private cards, and I've thought, especially since the rise of the digital wallet, that you'll see an increase. In fact, I lost all of the cards that I usually put in the back of my wallet for 3 days, and I was thinking about writing an article about how long I could go without having my ID or any of
Because
my
it's all on your
cards,
phone.
just with Apple Pay. And this was the premise of the company that in 2008 I started to work on, was like, I think that everything could eventually be in your phone. And I found the cards, thank goodness, and I didn't have to cancel them. I suspected they were somewhere in my house, and my son found them under my dresser. I think I dropped my phone and they'd popped out of there. But um, but yeah, I was kind of curious at how long we could go, and I think anyhow that piece of it could be interesting. The kind of the other digital piece, but I think the other part that I would be interested in is how many Capital One transactions happen overseas right now, because traditionally, like even American Express has been poorly accepted overseas.
Hmm.
And I would never travel to Europe without a Visa or a MasterCard, right?
Hmm.
I would only have in my wallet an Amex and something else because I know that I wouldn't
Agreed.
be able to use it all the time. Even for our business issuance, we have an Amex that we use, but we also carry a Visa because wherever we go, we need to be able to use something. So I don't know how much of their aspiration or how much of their current business is transacted overseas. And because I think the real opportunity is not just in the US consumer, although that is a major financial and short-term opportunity, but the real opportunity is creating a global competitor to Visa and MasterCard.
I think that is one of the reasons why they're going after having their own rails. Uh, because when I've traveled overseas, I see actually Discover accepted more than Amex, and so that might just be because of the countries I've been in or the places I've been in. Um,
It's
but
good data to look at though,
it's
right?
good data
Because
to look
maybe
at, and
there
they're the
maybe
right
there are
questions to be
higher
asking.
transactions that
Hmm.
are kind of looked at, and it may involve, a change in the issuance. I've got
I
a
think the
Capital One
most
card, so I'm
important
kind of
question to
issuing.
ask, though, is are we still going to see separate Capital One and Discover commercials? Because it feels like when I'm watching the NBA playoffs, like every other commercial is either Capital One or Discover, and I'm like, can we cut those down now that there's been a merger? That's like my number one question coming out of this transaction. And so forget everything else. Less Capital One and Discover commercials, please.
I love it. Well, that was a really fun episode. You would have thought that Target, Capital One, and Discover would have been all inside the same episode, but here we are. We're so glad to be with you on a Wednesday morning, and we'll see you tomorrow for an extended live. Please make sure that you've gotten an invite, and if you haven't, ping us, team@managementconsulted.com, or on any of our social channels. We would love to see you there live. We'd love to invite you into the Zoom. We'd love to take your questions live. We have no idea what we're going to talk about because it's not Thursday yet, but we'll see